Okay, hi there, guys. G'day, Paul. Hope you're doing well, mate. Hope everyone else had a great weekend also. Bit of a relaxing time or a bit of an unwind. Nice going to the weekend when you see the US up about 300 points in the Dow. Not good when you see it roll over today. All right, we've probably got a few more people who edge their way in slowly, bit by bit. No, all good, Paul. All good, mate. Don't like seeing the APT roll over either. There's a few things copping a bit of a hiding today, and it's more the ones that have got extended the last few days. So it's interesting to see. Just take a look at a couple of charts when you get a chance, especially ones that have been extended. Like there's a lot of stocks out there that have been extended for a few days, for quite a while, and they seem to be just getting knocked down a bit today. I think no one quite liked a big US rally, and then Saturday Trump come out and said something about the tariffs. It was all just fake news, I guess. He loves that word. All right, we'll get into it anyway. Might as well get started. Welcome to Trade Setup, the live stream. It's the 21st of Jan 2019, so off to a good start for the year. Anyone that's new, linking to us at Twitter in the top left-hand corner, Facebook the top right, and remember to subscribe to us at on the bottom right-hand corner to our YouTube channel. And also, if you do get a chance and you see some things pop up on those forums, then it'd be much appreciated if you give us a like or forward it on. Share it. Yep. Anyway, we'll get up and running. I'll push this down and I'll adjust that before I forget. There we go. I think I only realised I didn't adjust the screen last Monday. And I think it was hard to see the far right hand side of the chart as I was drawing it up. So sorry about that. Now we've got a few things we'll just go through today. Paul, I've got the CVA stuff. We'll take a look at that. We've got some stuff from Laurent that was in the forum. A couple of shares there. I'll go over those as well. A lot of them that I think I'm watching as well anyway, so let me just refresh something. And then I want to tick over copper, oil, and gold also, just to have a look at those. I did send out, the stupid thing was I sent out an alert the other day on gold. I thought it might kick on and just, take out a few shorts, squeeze them out before rolling over, and it's just turn around and roll over on me straight away. So wasn't so good when it does that. The minute you send out the alert, it starts heading south when you send out a potential buy. But anyway, that's the nature of the game. We've got copper, which is it's bounced off some key support zones, and it's potentially looking a little bit stretched, but longer term, it's been stretched to the downside. So it's just the near term that's just bouncing off that support zone. But I'm expecting, with the talk on what's going on between China and the US, that's going to get some support and find some support. Oil too had a good night on Friday. It rallied about $1 something, $1.30, 40, 50, something like that, I think, on the back of talk about China. Now, just touching on that, that's what pretty much the market at the moment is focused on. You've got earnings over in the US, obviously, that their market's enjoying, purely because the market's been sold down so hard. So even though they're backing off with some of their results coming out and forward-looking valuations, they're still, considering where the market actually is, they're not so bad. If the market was a lot higher, you'd expect a lot of those to get sold down. But unfortunately, the market has sold off, and so some of those valuations in the US are not so bad. As long as they sort of their profit targets or forward-looking stuff is pretty good, it's pretty handy. They might have to back off on a few have been readjusted, but like I said, where the market is doesn't make it look too bad at all. Now, my whole focus is obviously on what's happened with US and China. Now, I think it was on Thursday when the market got a bit of a kick because I don't know how to say his name, Munchkin, or something like that. He would come out and said that, well, not he said, there was reports that he was saying they're going to lift the tariffs on China. I don't know who reported. I think it was in the Wall Street Journal. And then he came out and said, no, that's not true. And then I think the market got a bit of a kick on Friday because of that. Then Trump came out and said on the weekend that he he didn't deny he did deny it, but in a roundabout way, he said that if it does happen, we are going to do this, this, and this, and it's all looking positive, blah blah. So he actually talked it up a bit. But unfortunately, our markets opened up about 30 or so. It didn't open up as strong as what we expected. I was expecting more 35 to 40 points, I think it was, and opened up about 25 to 30. And it's been backing off since. And you can see, well, actually, you can take a look on that's the S&P, sorry, the SPY 200. It's opened up down. You would have expected to open up about 65 or so, about where it consolidated into the close on Saturday. That's a 5-minute chart, by the way. It's opened down, headed south, popped up. But the thing is, it broke this trending uptrend line. It broke through that, popped back up, retraced a bit, and found some further selling pressures, roll over again. So that's not too positive on the ASX. I think it's just a bit of profit taking considering what's happening and where the market is. It is stretched at the moment. You can see, I've got my chart. I'll go over here. The XJO. It is stretched and it's coming up into that 59.50 zone. What are we now? Still about 60 points away at the moment. But we are stretched up in that zone, and that's a key weekly zone as well, 59.50, a key weekly resistance zone. Now, let's actually just thicken that up a bit. Your technicals, where is it? Index, that's what I wanted. If you're into your technicals, and you've been following for a while what we're doing, on the weekly, it's coming up into sort of an anchor zone. Okay, so you can see the market propped down, had a couple of good weeks up, got smacked. This green candle, I don't take that as a zone really at all. It's the fact that it sold off, had a couple of green weeks back up into that zone. So that for me is more your anchor around the 59.50. And then we had pretty much red from there on in. That green candle was pretty much indecision and then continued on the next couple of weeks into Christie, just into the end of the year. And then it bounced pretty hard. So you've got this almighty bounce, which is if the market's really negative, you don't tend to get those sorts of bounces, but there's nothing to say where it's come right up back into that zone because it was extended on the weekly as well. So you've got to take a few things into account if you're looking at your technicals and you're trying to adjust for. I know a lot of people would have been seeing this bounce off this 54 and seeing it go for a couple of weeks and watching it just keep going, keep ticking away, and any shorts keep getting squeezed out. They would have been looking at and that's what I think you got the last week or so is people just chasing their tail, that FOMO, fear of missing out, chasing it back up again. But yeah, it can easily happen when the market's quite extended away from the EMAs and it gets extended to the downside. So people can get a bit excited. They get a bit excited on the way down. It's hard. I'm just trying to recap what I'm saying actually. Piece together everyone is expecting a bit of a sell-off up here. Everyone was talking about it, but there's no reason to sell. This first was really the first heads up. If you're right into your technicals, and you're onto your charts, then that was really the first heads up where you've got your lower high in here. Whereas previously, I mean, this was a lower high in here. Previously, it kept getting held up. But the way this was acting, and then if you actually went short, that worked out fine. And it was really this key week. Once it broke through that lows, it really got hammered. And that was coming on the back of another big hammering previously. Now, it did happen, like I said, back at the start of 2018. And then we pushed up into new highs. It's happened a second time, except it really extended itself down here and broke a key level around that 57.25, say 57 even. Then we had a bit of a bounce, and a lot of people were talking, okay, it's bouncing off. I was even looking for a potential bounce off that zone, but it's what happens following. You do once you've marked up your key levels. Say this here was a key level for us. Let's just draw that up. So, oops, that's not what I want. That's not what I want. There we go. So here's sort of a key level. You're marking it up pure and simply because that's where you would expect some sort of reaction. Not quite in there. Look, it did push down, so you got this pop, lower high, press down, and then we started to get in a retrace. So you would really look at that as another high low because it didn't push down. When you push down into a zone, that's when you really want to take note. And you come from such a high level here too. You've just smacked straight back down in there. So when you mark up your levels on your chart, that's the levels. It doesn't particularly mean that you think it's going to hold up there. you do expect a reaction there. And what you're going to take note of after that reaction is sort of the strength of the reaction and also what happens since. And we were looking at, this was the key level at that time, was 59.50, is when the market pressed down to that zone, it reacted back up, but that didn't break. So that's a key sort of a heads up saying, oh, look, that's your anchor to the downtrend. That hasn't broken. That's not a good sign if you're a bull, if you're becoming a bull. So people who may have bought up in these those couple of weeks where it did bounce off that zone, 56.50 to 56.75, potentially ones that got squeezed back out again, and then you got, okay, this candle here did reject, but then the following week it did finish on its lows, a bit of an indecision. That was all hovering around that same level, and then it started accelerating, and it really started cleaning out that level. So that's why you've got to really, really take note of where your anchors are. All right, and we at that stage, this was definitely an anchor to this downtrend, this daily downtrend. It didn't break. Then we'd extended that, so we had this sort of double test there. It's a little green pop up. That was the initial back in October when it formed that level, pushed down, it come back up to retest that level at 59.50, then press down. Then that's when you got that secondary move, or that move down after the retest, which really cleaned out any longs that may have built up at that initial reaction. So you've got to take note of where your levels are, where's going to be a good level. You do expect a reaction off that level, but what you have to judge from there is not just guessing that it's going to hold up, is judging the price action after that it's held up. Okay, does that make sense? So if we press down to that zone and we got this big pop, I would ideally like to see it break the anchor. Let's just draw that up properly. I'd ideally like to see it break the anchor. That's your anchor there. To pop up, break the anchor, and then come back down and see a bit of buying pressure at higher levels. Say something like what we saw back here. Okay, it's at a higher level, see some buying pressure, and that would have led me to be a bit more bullish. But instead, we didn't break that level. We come straight back down into it within the next 2 weeks, and then proceed to chop around that level above and below, and then really cleaned it out, washed it out the last, well, I was just coming into December, like I was saying. So what we're seeing now is still, there is potential where, the bulls and bears, I don't want to lean on either side of the fence. We've had a big run up, and typically you don't see these sort of V-shaped recoveries like that. If the market's very strong, you do see that when the market's just getting that, or when people are looking for a bargain, they're starting to buy up into a bargain. It's a thin market too, don't forget, the start of the year over Christmas. So it's easy to bully it a bit higher when people are chasing the market higher still. What it has done though, we've still got that anchor in play, that 59.50. It is pushing up into there, and you can see by the candles too. This is just another thing that I guess, if you're new to it all, look at the size of the candles too. This is really not really an engulfing candle. An engulfing candle is when it sort of comes low and goes higher, and reverse for shorts. That's pretty stupid. Reverse for shorts. So if you've got a candle there, the market's, well, this is actually making a bit of a bath of this, aren't I? So when we're talking engulfing candles, if the market's coming up, I've got to draw them straight up, 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 and then you've got it's pressed higher, and then you got an engulfing candle that actually goes higher and then closes below the previous candle. That's engulfing. You typically expect bear action after that. And if you flip that round for when the market's coming into a support zone potentially, you take note of these engulfing candles. The market could press down, and potentially it doesn't have to technically. You can have a candle like that, and then it can engulfing candle like that, which is a previous week, previous day. Now that's typically a bullish, or showing exhaustion in the level. Now this is not potentially an engulfing candle, this first green candle, but the size of it is what we're looking at. That's really acceleration from open to close, closed on its highs. The next week was a bit indecision. Then this week, again, was very similar to the previous green candle, but the body of the candle is a bit shorter. And then again, it's shorter. So it's just slowing. You can see that momentum, as it's approaching that resistance zone, is starting to slow. And that probably goes into the same with stochastics, going from overbought. As it's approaching that oversold, approaching overbought, the candles are starting to get narrow range candles. The volatility is starting to come out. They're starting to slow down on the upside. I mean, it's still, by all means, it's still going up, but it's just something to take note. And that's why when we talk about the market being a bit stretched, we're talking from lows to highs, or from highs to lows, it's starting to look a bit stretched. So that's our focus at the moment, is really just checking out to see what happens. It's that key 59.50. Now, if we do slow down into that level, we haven't quite reached there yet. If we're just finding there's a bit of selling, and today's probably the first heads up that, look, maybe something's not too good at the moment. We'll click it down to the daily. Maybe it's not, you can see that the candles previously, that was the weekly candle, that weekly up, you got a couple of days, really good acceleration high, finish on the highs, a bit of reaction lower, which you would expect. And that was the first, off your first sort of anchor level on the daily chart. But this is what you ideally want to see. This is what I was just talking about when you get bullish. Look at this candle in particular here. So I'm probably getting sidetracked a bit, guys. I just thought we'd go over a few little charting bits and pieces, and then we'll get into a few other charts before we carry on. There's not much to talk about on the global markets in the way of what's driving the market. It's pretty obvious, China and the US. I thought what we want to do, because um, are you going to stay a bull? Are you going to stay a bear? If you've got some longs, you manage to get some longs off this higher low in here. What are you going to do? Are you going to hold them, thinking there's going to be a bigger correction back up to the highs? Are you going to turn bearish, take out your longs and flip over to go short? What are you going to do? And it all comes down to what's happening on the ASX, what's happening on the other charts, on the Dow, the S&P, and so on. So analyzing this is ideally what you'd like to see if the market's going to be turned bullish, which is what we didn't see back here. Or, yeah, we didn't see that back here on the weekly or the daily. It just basically touched on that level, went straight back down again. You want to see that washout. And if you see that, even though it was rejected, it's actually taken out a few stops above that key anchor level on the daily, which is a good sign. I know I talk about washouts, where washouts, it actually washes it out and then heads south again. And the futures do that quite a bit. You've got to take note, but you've got to take note and have two things. Is that going to be a washout and continuation of the trend down, or is that a washout clearing the way to move higher again? And it comes down to whether you get your high low or lower high after that. So what I'm talking about is if the market, say, pressed down to zone, that's your key anchors pressed down, and then you've retraced, you've got this little washout here. Now there's two things that I'm always looking for after that. I'm always taking note of, is that a washout? Is it a washout for a change of trend or a washout for a continuation? It comes down to what happens in the preceding next few candles. Now, if it pops down and then you get this little bounce, that could be a higher low. That could be what we're seeing here. But then, of course, if it turns around and starts to roll over here, then you want to go short. And that's just really just cleaning people out. It's what it's doing there is potentially, it's cleaning out the shorts, but it's whipping in some more longs maybe, and then turn around and squeeze them back out, especially if this trend down is starting to run out of steam. It has to have a good retracement, get some more longs put in place, and then turn around. That's the fuel when they close out to squeeze them and the market heads south. So that's on the short side. Now, if we are looking for that retracement, we'd like to see something, potentially like that, which you pretty much got, and then that pop up. So it's just the reverse. This little inside level here, what you can see, these levels, that's all what you're looking for after you're getting that washout. Now, if you see that type of structure, yeah, then you could probably flip it over and you'd be a bit of a bull, but you've got to be concerned because nothing's changed dramatically on the weekly charts, nothing at all. We're just having a bit of a bounce on the weekly. It is a correction on the daily, but not on the weekly just yet, because this is still the key level in place at 59.50. If you're going long in that structure on the ASX, and I'm guessing we did and a few others did as well, just going to be aware of pretty much where we are at the moment, just to see what's happening, what sort of reaction we get back off this 59.50. Ideally, if we see that washout and see this price action again on the bigger time frames, like I said, this probably pop up here, pop up, then a pullback, maybe goes lower and then starts to build. All this as a high low, maybe it could be down at 56, 50, 57. We don't know what's going to happen just yet. That's ideally what we'd be looking for a bigger time frame rally and to get a bit more confidence in this market. But by all means, to me, this market's getting a bit stretched. It could easily roll over. And if we run out of steam below that 59.50 and we start to fall short of that resistance and start to do this, that type of price action on the downside without getting there, that could be potentially very bearish. But we'll just have to see what happens over the next few days. You've got to really plan ahead. You can't just say, okay, we're going up, that's it, it's all over, and get stuck looking at stocks, individual stocks. You always, especially markets like this, you've always got to have in the back of your mind, what could happen? What am I looking for? And what do I want to see if I want to stay bullish and really load up? Or what do I want to see if I want to start easing off on some longs? What do I want to see if I want to go short? What do I want to see if I close out all my longs and just go on the sidelines for a while? So you've got to plan ahead, and this is pretty much what we've been doing, what you do with the ASX, and by looking at the other major indices and getting a feel what's happening. I know too many people have probably said it before too, and I hate to think that everyone does that without looking at the global markets. It's quite easily if you've started your trading journey in a bull market, it can be very dangerous because the bull market's very easy and you forget about what the global market's happening, what's happening in the global market, what's happening in the US, what's happening because it's a bull market. It's very easy. So you just get focused on you narrow your focus too much on individual stocks and you can just sit there and look at individual stocks and okay, the market's down, it's been down for a few days, you forget about it, you don't really look at the ASX as much as you're looking at your individual portfolio. And one day you turn around and wonder why it's getting crucified because there's been some key levels, like we're saying up here, this key level break after this bearish move. Key level, you got the lower highs, all that come into play, which is exactly what we're saying here. You can see that little minor level just in here, little minor level just in here. That sort of pattern can repeat itself quite a bit just in here again. So when you see that inside, or we say inside high low, inside lower high, you've really got to take note of that because that to me is more bearish or more bullish. It's more action to follow. So by really planning ahead, we know that the market's popped up. It's coming to this resistance zone around that 59.50. We got to see what's going to happen over the coming days. A lot of people think we're stretched. That's fine. We could be stretched. We can go straight through it. We can plow straight through it. No one knows what's going to happen. But odds are, if we're stretched into a key level and we're running out of steam, odds are we're going to have a pullback. So if we do have a pullback, we're going to adjust. We're going to start looking at the price action. Is it going to expand like this? You can see these candles red, big red candle, indecision, expanded red candle, starts running out of steam, couple of green candles, and that's when you get your lower high. And this, you can see this candle, bigger red candle. The market's expanding lower. So that's not a bearish, that's not a bullish market at all. That's a really bearish market when you get that expansion, those red candles. And reverse for the green candles. When you start getting bigger green candles, then you know that's starting to rally. And what you'd want to do is see if we can start to roll over and we start to build maybe this scenario where we're building that higher low around here, then I think maybe the market's starting to repair itself, starting to put in the base and starting to give us an opportunity for a longer term, not just off your daily charts, like this short-term rally, but a longer-term rally. I hope that makes sense there, guys. I probably got really sidetracked there. Now I want to go into let's just take a look at what the US is doing. I'll go over to here. I haven't looked at them for a while. I don't think I looked at them too much, but the US is very similar. They tend to go, they don't do things in halves. Like we're a bit more subdued on the rally, whereas they're not a bounce straight back up. But also on the downside, they can get really ahead of themselves. So this is the Dow. The overall price action to me, yeah, is this big washout? Because by the time you get to this type of move lower, in here you're still within the support zones. These couple of bounces here, you're still within that support zone. There's still some people, you're trading purely off your technical. There's By this stage, once we bounced off that level back up to here for the second time we built that lower high, it's still unknown. I know the MAs are heading south, but it's still unknown whether when you get more chop and then start to build a higher low and then rally and go into new all-time highs again, or we're going to roll over. So at that stage, no one knows what's going to happen. So you've got to respect what your charts are telling you. You've got to respect, you don't just go and bail on your portfolio and then you find out it built a high low and you just start rebuilding it at higher levels. That's the last thing you want to do. So you've got to give yourself a chance on both sides. There's times that, if this happened here, you gave yourself a chance and it actually rallied, took off into new highs. Great. But there's going to be times like this too when you do give yourself some room, you do respect your charts, and it doesn't quite work out. But that's the name of the game, and that's why if you do it, rinse and repeat, do the same things over and over again. I think longer term it's going to be really beneficial. If you start to second guess what's going to happen with that price action, that's where you're going to be second guessing everything. What's happening on the index, what's happening on your shares, what's happening on this, that, and the other. And there's going to be times when, it may work out for you, but more often than not, I think you might on a good bull run, if you second guess, just get out on the rally. There's going to be times when it just keeps going and going and going, and there was no reason to get out, but because you second guess, you cut your winning short. And also you might second guess, think, oh, it's going to bounce, and the market just heads south, and you take a much bigger loss than what you think. So that's why I'm a big advocate for letting that price action tell you what's happening. Let it speak to you. Let it show you what it's going to do, and plan ahead. Okay, when we're planning ahead here, as soon as we get that green candle, it's gone through this 24,175 zone. if you can see, you've got to be heads up and go, and then you've got a couple of candles which started to stall at lower levels again. You go, this is not looking good. And we're not the only ones that thought that, because the market's powered through the next few days after that and completely dropped off the side of the cliff. Now, one thing about that too, it did extend, and that was into December. So I guess there's things to be said about that. You can either say a thinner volume coming to Chrissy, so that move lower was a bit more extended what it would normally be. At the same time, the bounce is maybe a bit extended what it's normally is. But either way, it is what it is, and we've got to assess it from what we're seeing. Now, like I was saying, very similar to the ASX. It has had a big bounce, V-shaped recovery. Don't trust it at all. You got this little pullback here and then just took off. It's an extended market, but there's nothing to say it can't keep going extended. So if you've got your individual shares, it could be a time where you pure and simply just tighten up your stops. Same with the ASX. Maybe you tighten up your exits, tighten up your risk management when things are looking a little bit stretched. But it's still, you can still obviously, if you find a good share, like we had the APT the other day, got really lucky with a good announcement. But in all honesty, it looked great and it was a good setup. Even if the market stretched, you're probably going to honor those little setups, but just make sure you know in the back of your mind what could be happening on the overall index and what your plans are. So how you're going to attack each individual trade. Oh, that's making sense, guys. Probably it's one of those days of getting sidetracked too much. There's probably a lot that it'd be good to talk about and go into a bit more. But in all honesty, I think we are getting a bit extended on both the ASX. We're getting extended on the Dow. The S&P is going to be looking very much the same. We won't go into that. It's the same. Let's just see if we can see the Dow. Let me just get over here. I just want to see if I can see DAX. But DAX is not too bad. It's a bit different. It's been steadily rolling over. But I guess on the weekly, it is extended to the downside here. Where's the FTSE? Whoops. FTSE's a bit the same. So it all could just be a bounce, or we get something like this. If we continue on the way up, I don't find that too bad. If we do extend further and further on the upside, you can get something like this. Then it could push down, good pullback, build your high low, and up we go again. But all markets are very similar. Extended on the down, they have extended themselves on the downside. They've bounced quite hard, and we're getting to that stage now where we just have to start planning ahead, especially the ASX, the one we trade, that's coming up into the resistance zone. We just got to plan for breaks. Then what happens? Are we going to get a high low, lower highs? What kind of price action are we going to get? How does that translate to our portfolios? Now let's go over to, I'll get onto oil while I'm at it. I just want to go over copper and oil because I think copper especially. Here is the daily chart. Now you can see, if we scroll back a bit more, you see there's a key zone at 2.47. This support zone through here, the market's pushed up, pulled back, built a higher low in here, major higher low, pressed up, and you pressed up all the way up until, was it 331? And if you go and look at any sort of copper stock, it's about June last year when they all headed south. And that's when you got that double top pretty much on copper. And I think if you go back to a weekly chart, you can see that sloping resistance zone that I've got marked up. When you get your double top off that zone, that's not going to be too impressive. The market pretty much failed from there. Copper dropped off the side of a cliff. Really got sold heavily. And what we saw is a reaction off, what's that zone, 255. I haven't got that marked up. This low down here started reacting. Again, it's traded straight up to the anchor and then started falling apart again. At that stage, I was thinking if it was starting to look like it was potentially going to rally, but instead, there's more talk of problems with China and the US. Things get extended, and then copper sold off, broke down through that support, and just really is retested recently that 255 zone and has reacted up off that 255. Now, is this going to be the reverse of what we saw? Double top up here. Are we going to get a double bottom? We don't know just yet, but the more times it tests something and rejects it, the more probability you can add to that support zone actually holding. Now, this is more fundamentally based now. With copper, I think physical supplies are reducing. They're getting used up. Stockpiles are getting reduced. So that should be bullish on price. The problem is it's been stuck in this it's still the pressure's on because demand also, everyone's anticipating demand has really dropped off because of China and US, what's happening there. Now, if that gets sorted out, you would expect copper to start being more bullish. In the last few days, it has been a bit more bullish than any sort of previous bounce. We had a good bounce here, but price action was different here. We've had a good bounce here, then it chops away sideways. And the last couple of days has really pressed high. That's, for me, is a good little positive sign. It's got this minor high low in here. It doesn't mean that it can't react off this zone, head straight south, and take out that support, trade down to 247. Nothing to say just yet. We still got to keep our eyes on this, but if things change between US and China dramatically, and the bulls start coming out, then I think there could be some really good opportunities in the copper. And this could really retrace straight back up and really plow along because it has got some good fundamental drivers backing it. What else was I going to get onto? Oh, let's get onto crude, and then we'll open it up a bit. We've got, like I said, CBA, and we've got a few from Laurent to tick over. There's oil. Oil's another one. It's another one purely because it's been extended. You can see it's washed out that zone. That was at 75, say 75 level, washed it out, and we pretty much, again, fell off a cliff there. And again, it's a lot, and that big run up on Friday is because of the talk between US and China, and also OPEC reducing output or reducing production. It's really should have potentially put a floor in that market, but I think they did say that, and they said they were going to do it, and we had this little spike down to 42.50. Now, it has reacted quite solidly, and I like the way it's reacted off that 42.50. You can pretty much I would just take out that zone. I'm just going to take that out because I don't see that's necessary. So that was a key level at 42.50. It's come down, bounced off there, reacted back up, and it was quite a good reaction. I would expect if you're going to see more bearish price action, it shouldn't have retraced all the way back up to 54.30. It should have really held, chopped around a bit, and then start to find some minor inside lower highs, and then start to put the pressure on again. Sellers starting to come in and really start to pressure back down towards 42.50. Instead, it was a good solid reaction back up. So I think there's going to be some opportunity in oil if all goes well, and I'm talking if all goes well between US and China. What I'd like to see here is, again, this washout, but instead of a washout and a roll over, followed by lower highs, a washout, a good little pullback, and then buyers starting to step in at high levels. I can't really find any examples. Something like this, it washed out a couple of levels on this little spike, pulls back, and then you get to run it out of steam. Stochastics don't need to go to oversold. They can just hover around the 50% mark and then start to lift from there, build your high low, and then start to press up. I think that could be good. And then we could see it's worth looking into oil. So have those two things in the back of your mind. Gold, if it all works out between US and China, I wouldn't expect that to do, too much. Let's have a look at gold. What I'm seeing with gold. Just 1 second ago. Sorry, guys. Can you just bear with me 1 second? Just be 1 minute. Sorry, guys. Back again. All right. Can you all hear me? No worries. Now, yeah, crude. What are we up to now? Gold. So gold on the daily. I was actually looking for this. It was more of you could probably see it only barely. It was more of a bit of a flag, and I was expecting that. I thought that's going to lead. You're going to get some, obviously, sellers are starting to come in because it has been quite bullish. And I thought that could be leading to a nice little squeeze and then a press back up into that 13. 13 was a key level. 13 is the whole number. I was actually expecting that on the shorter term really to spike up in there and then potentially get a reaction lower. Instead, it's played out a bit differently. It has, broken to the downside. It's really just touching on that minor anchor off the daily, and the anchor for this big trend up. It's not a major anchor. It's just an anchor from pretty much this low at around 1200, say, up to somewhere around 1300. So it's just touching off there. It's just bouncing off there now, and you can see that last week wasn't too on the daily. That Friday move down was bigger than usual. So what I'd be watching for this one, if we just start to get some lower highs come into play, we might be putting pressure on all these bulls that have been building up, the buyers getting squeezed out, and then it'd be interesting to see what happens from there, whether it can, hold longer term, come back down and retest a zone in here somewhere, and then start to build, and you get this market building for a bigger press higher. Well, let me just get up here. And then that could take us right back up to 1380. There's 1380 highs, but at the moment we'll just have to see. I think gold, if it all gets worked out, I think in the shorter term or even nearer term, I'm expecting this to more be a lower high and put some pressure on. Then obviously if there's a big market sell-off, that could be a different story. But yeah, we'll see. I'm not really looking to gold for any of the stocks. I think a lot of them have been going fairly hard lately, and they're looking to me a bit too extended to bother with at the moment. I don't mind the oil and copper. That's sort of what I got my eye on just at the moment, purely because they have both those commodities have been sold down. There is potential for a good little break higher, and the stocks themselves have been down, down for quite a while now. So there's potential on the upside. Whereas gold stocks are actually on the highs. I would expect more of a bit of a pullback into those. Yeah, so that's just a few little things that I'm watching at the moment. I think is everyone else looking at your copper, oil, those stocks in there? I know Lawrence got a couple. We'll put those in the second, Laurent. What I'll do now is look into CBA. Now, my take on this, I know Paul, he's emailed me just, we're having a bit of a chat about this, and I like what he's looking at. And I know Paul is attacking it in a more aggressive manner, which is good. I think he said he got long somewhere off this high low, and that's, even though the overall structure is well and truly on the downside, the weekly, and it hasn't changed just yet. You haven't got anything broken, so this could easily head down. It's in all honesty, it's a bank. A bank's a bank. They're money making machines, and this price action is not overly negative. If I'm making sense, I'll draw it up. So what I'll do, I'll get that. I'll get that. I'll get that. So what we've got here is that's pretty much, one big move, one big bounce in your weekly, press down again, really just traded on that low, touched up to another minor level. But all in all, that's sort of all one part of one move. And then all this move down here. Now this hasn't broken just yet. That's your key anchor level around 76. So you can see that if you break down this leg, we break it down with another color. This is what we're looking at. Lower highs still in play, lower highs still in play. This is your retracement. As long as that anchor level is not broken, we could roll over pretty much exactly where we are. We could go boom, straight back down, take out this low at 65, and then continue this leg down. We could easily continue that leg down at the moment. So that's my take on the weekly. I'm not bullish on this longer term, but I thought I'd point out the longer term structure because it doesn't mean there can't be a shorter term trade in there. I know Paul was long from 30, 67, something like that. So a nice little entry. It was in this zone, I'm pretty sure. Correct me if I'm wrong, Paul. It was in this zone in here, somewhere off those lows, off a higher low, which is nice aggressive trading. And he'll know more about the fundamentals of banks than me. But I don't see anything wrong with that trade off a nice short-term basis. But longer term, I would prefer to see some action, some better action. Because all this leg here, this leg just up hasn't finished. If we start to roll over here and press lower, then I'd want to see exactly what's going to happen. I want to see if it takes out that 65 or we start potentially retesting an inside zone. So I'll go to the daily now, but just bear that in mind. That leg down is still intact. unlike, we get a nice bounce here. We've got an office retest the low, took out that higher low, and then we got that big bounce back up here. We haven't, and that was off a solid, 1, 2, 3, 4, 5 tests of the $70 mark before we got this big bounce back up here and being part of that. Instead, this has been well and truly controlled. There's still some things happening. There's still some global pressures out there. I mean, if we do roll over on the ASX, like we were talking about before, for the weekly charts, if we have a big roll over there, there's nothing to say that this could roll over and take out 65 quite easily and have a good pullback. And don't forget, we are looking to get a bit extended up at the high side on the weekly charts. So when the weeklies are extended, the moves down a bit bigger. All right. So we'll go flick it down to the daily now. And we'll just talk through the entry. I wouldn't be too bullish up there. I mean, Paul and I might have a different opinion, which is fine. That's the way markets work. Here we go. So I think the entry was off, or somewhere around here. Correct me if I'm wrong, Paul. It was somewhere around there, wasn't it? 68. So it was off this high low, which is great. So you've got this minor double bottom, which is good. It's broken the anchor. So everything is in play for that leg down. So that one major leg down to go into contraction, or a pullback of that leg down, which we did get out. And that's what he was looking for, being a bit more aggressive on the banks and just waiting to see if we do get that price action where if it just continues, great. There's nothing to say we can't continue right up to the weekly anchor around 76, which is up here, don't forget. There's no reason why we can't continue up there. Paul's got in nice and early, and he's really made hay of that trade back up there. But if we do roll over, if you just tighten his risk up, great. Then he can get stopped out of there, book his profit, and just see what happens from there. I know you were mentioning potentially adding to that position. For me, I wouldn't be adding. I mean, I wouldn't add to that just yet. I'm not a major fan of it, and that's purely because of the what do you call them? The weekly trade. Oh, sorry, the weekly charts. Said my phone going off there. Weekly charts. So I've got my eye on there. And I think it needs to do more work. I think if we can on the weekly, if we're heading south like that, I think if we can do something like this type of price action where you're building a major high low off the weeklies, yeah, I think that's a different scenario to adding when you're potentially on a high. Does that make sense? So two different areas. At the moment, we're about here on that weekly cycle, potentially looking for another rollover below the weekly anchor of 76. That's about here. Another rollover. So adding up here would be a bit tough for me personally. I would rather see a higher low build off the weekly chart. Now, it's going to take a lot of time to play out. But if that plays out, great. The fact that you're long from here, and if the market does just keep going up, that's also great. You're in. So if you're looking for a big, longer term play, your key level potentially, would be down here. If you want to give it quite a bit of room, put your stop down at 67. You've got it at 68. You could take off, book a bit of a gain there. I mean, there's a number of things you can do. You just got to be wary of what could happen if it rolls over from here. The weekly and the ASX plays out. The ASX is stretched. First things that'll go down will be the banks. They'll start coming off. So there's too many things just longer term in my mind that are building up to put pressure on the CBA. But everyone could be wrong. It could easily just keep grinding up. Like I was saying, there is that potential for the ASX to just keep going through that 59.50, keep grinding up day after day. And there's going to be a lot of people. There's going to be a lot of fuel that will keep shorting. There'll be people that will always short that market, trying to second guess where the high is, trying to pick the top and getting squeezed out. I've known people that have done it quite a bit in the past on different markets. Keep thinking it's got to be short and loading up on the short. There's times that it works out if you keep adding to your short, but there's times when it just cleans you right up and you'll build a position, get squeezed out, take a massive loss. So that's what this market could be setting up for that also, but we just don't know what's going to happen yet. So that for me is the old CBA. So far so good, Paul. I think you've done a cracking job, and I like the way I think I'm seeing more and more. You're looking at these type of setups and being nice and aggressive, and I think that's good. That's suiting, as long as you know exactly what your play is and what the overall structure. There's times when if that weekly trend is just reversed, I think that's a prime. Like if your weekly trend's like this, okay, and we're at that. So if you're just basically flipping that over, we're at this zone here, and then you get this type of price action where it pops up and it builds a little minor level, then that's a nice aggressive entry rather than waiting for it to break up into the new highs and then having your stop below there. that type of entry there, when it's in a rising trend, is an absolute prime, perfect entry. I reckon it's great. It's when it's into a market that's the weekly's actually flipped over and it's on the way down. Again, you got to remember that there's different time frames. We're talking all different time frames, and anything can happen. The fact that you've got this type of structure and you're always going to be working off your high lows if you're going to go long, or lower highs if you're going to go short. But the reason why we always talk about the major structure is to give you some sort of plan for your trade, or some sort of outlook. Maybe don't be overly aggressive. Maybe don't let it, leave your stops really wide, and leave um, loose risk management because you think it's going to go. This is going to be the big one. You're going to hit out of the park. Um, that's the way I'm always looking. If you're trading, like Paul's example here, trading like that, knowing that their weekly could be down, it could be coming into a zone now, and all I would do is just start to tighten up your risk, lock in some gains. If you're wrong and it keeps going, there's no risk. If you're right and it takes you out, you can readjust it. You can wait till it pulls back and then re-enter. Nothing wrong with re-entering a market. And it's all about risk management, especially at the moment. But yeah, there's always trades when even if your longer term time frame is down, you can always take bounce trades. There's not continuation trades. A continuation trade is this continuation of that weekly trend up, with the same style of high or low off your daily charts. Or it's a bounce trade off your daily chart because the market's extended on the downside. And this is just a bounce trade off looking at your daily charts from your weekly downtrend. As long as you're bearing that in mind, you know what's happening in your bigger time frame, so you can look to tighten up risk, or manage your risk a lot better. All right. God, I'm babbling a bit today, aren't I? Now, what were yours, Lauren? I'm just going to get those up. So FOD, we talked about this today. Actually, that's come off a bit. Pretty much, I think that's copped a bit of pressure from the overall market. But that weekly, not much to talk about. It's come off a nice level. It really did nothing through 4 cents. This is a small cap, by the way, very small trade. It's traded nearly 500,000. It's probably about 500,000. This is only the ASX, by the way. I don't know if it's trading on the other exchange. But yeah, it's up. Weekly still holding high levels. There's a high low in here at around 10 cents. It popped up into new highs, so that's continuation. It's pulled back. You're looking for that 13 cent level to hold. It hasn't yet, so you don't. That's not a high. That's not your anchor level at 13 cents yet. It's still below 10. So if you're buying into that zone there, your stop's got to be below 10. That's quite, in percentage terms, quite a big stop. But weekly still up. Nothing's broken on the weekly charts yet. Now what we're doing is dropping it down to the daily. So I'm going to have to rush through a few things now. So that's our weekly up, pull back in the weekly, next level up. So we're looking for this to be a line in the sand for the weekly continuation and start to lift from there. It's looking good so far. For me, that key level is at 17.5 because you've had this pullback, pop up, and then what we've done from there is pull back and find buying at high levels. So it's only at 0.5%, but it is a higher low. And it's just showing that buyers are not waiting to see if it comes down to 13. So the weight of the trades are in the buy side. All right. And the buyers are happy to step up by 0.5 cent or a cent or so to get set because they're bullish on it. It's pure and simple. And that's why you get these higher levels. Now, if they weren't bullish, or if the weight was in the selling, you'd be getting those lower highs in the market pressuring, and you wouldn't get buyers trying to buy it at higher levels if they're not really certain of it, if they're not trying to chase it. All right, they'd probably just be going, look, bugger it, I'll sit down a bit level, and if I get hit on that low because I'm not certain about this trade, I'll go down to a lower level and get a better feel. And that's pretty much the psychology behind it. So what we're seeing is these higher levels holding, higher level, but this could just be, that two-legged move that we talk about a lot before we roll over and take out 13. It could be that. Or what we'll be looking for is, I would ideally like to see it punch up 17.5, say 18, and then come down and start to build some higher levels, higher lows. I think that would lead, and especially if we get a bit of time, even if we don't quite get the 17.5, but we spend a bit of time, say that 17.5 up there, we back off from there early, and then start getting what I say contraction with some minor lower highs and minor higher lows, and getting the market contract, and then looking for a buy entry, anticipating that break, especially if there's a bit of time that's gone past, not 1 or 2 days, more like a week or two. If we can do that, I think that's still strength in buying. And then I think that little break up is going to trigger some buying and chasing through the 7.5 and just power its way up through, potentially straight up through 21. So that for me is definitely one to keep an eye on at the moment. Maybe just need a bit more time under our belt and just hold above that MA, hold above 15 or around 15 and start to build before it really kicks off. SHV, I don't like how it's extended. I'm looking for more of this, a bit of a backing, for the market to back off. It's probably more the weekly chart. Actually, I don't mind the weekly. That's right. The weekly is potentially sitting on the MAs. That's why I wouldn't take this on a breakthrough. Was it 650, which is that minor high? I wouldn't take it a buy and a breakthrough there purely because you've got quite wide risk management because you've got to trade it. If you're trading off the weekly, you trade off the weekly. Don't try to, you know, um, refine too much on that daily chart because it could easily pull down, hold the weekly, and then up she goes. If you're going to refine your exit on the weekly off the daily, you really got to do the same with your entry as well. So that weekly chart, I actually don't mind it. You've got high levels, especially after this sort of chop, big rally that was, what was it, 2015, straight back down. Whatever's caused this big sell-off is starting to filter out of the market. The sellers are starting to filter out. They're coming and start to regroup. Potentially that is your $5 level is going to be a high low. It hasn't proven itself just yet. It's going to prove itself when we test 750, and then that's confirmed. I know it's miles away, but that's just the way your charts. You got to look at your charts. If we can build and push up to 750, that'd be great. I think longer term we're going to take out that and we're going to start edging away, probably in a bit more controlled manner than a rally like that. But it's going to be a nice little long entry. The market's getting a bit extended up here. That's what I think the problem is. It was extended when we got to 750. Look, it was extended before that. So there's no reason why you can't buy it on your weekly. You get this type of price action, green, green, a couple of red candles, high, low, bang, just keeps going up. The whole time it's been extended in extended territory. We could do that, but it's that daily too. I don't like to see that extended prior to a break on your daily either, because I think that's a lower probability trade for me. So we'll just, for me, just keep an eye on that one for the moment. We'll see how that one plays out. Yeah, I'm sort of more inclined to think that could back off from that level. Big pull, a decent enough pullback. If it can retest down to maybe below 6 or so, and then chop around from there and then start to lift, just spend a bit more time consolidating this level above 6 or around 6, then that would be a lot more positive for me. What were the other ones we got? SHV, there's no UV, is there? I don't know if that's UV, but we'll skip that. CVN. CVN's another one we've got on the list, which the weekly's not too pleasant. It's more the daily. I think if we consolidate around this level above 35 on the daily, you've got to look at what the weekly's doing. Potentially, we're going to hold that 30 zone. Does that make sense? So it's more the daily in conjunction with what the weekly's doing. So you can see, I'll draw it up. I don't mind this at all. And I don't mind the fact that even though you've taken out this low, you just got to look what happened when the market powered higher. So what has happened? It's gapped up and then completely fell over. But that's really probably, 50% retracement of this move up, say from that low to that high, maybe a bit more, 60%. Okay, you don't really, if you're boarded up here, you're really just the last thing you want to see, but it's happening. And then you've bounced off that level. Okay, that's your 32.5. Okay, then there's probably, you're going to get that second wave of selling. It's come down. But instead of taking out that low and completely capitulating back to the where the rally originated around 15 or so cents, it's found some buying. It's come back in, and then you've got this little green candle. So that's a good heads up that, oh, hang on a sec. And you can see the steepness of this compared to this sell-off. This one, it's started and it just washed out that level, 32.5, touched down at 30, only 2.5 cents. But then it has now rejected that high. So that's, for me, is not a bad sign. Not a bad sign at all. I wouldn't buy it off this chart at all just here. And I think we've got a little minor level at around, it's probably somewhere around 38, 39. You'll see it better on the daily, that zone there, just on the top of that green candle. That is really going to be more of a trigger for me. But I like the way it's washed out that zone. It's washed out down to 30 and rejected it. If that was weak, you really wouldn't get this type of slowing down into a support zone. You just go boom, straight down. or that might extend itself a bit further. Instead, buyers are starting to step in on this move down, and then we rejected and they've taken control and popped it higher again. So for me, this kind of the way this is coming down, it's starting to run out of steam on the downside. The sellers are starting to ease off. The buyers are starting to come back in a bit stronger and are starting to hold up. And all that, when you put that into your daily charts, you bear that in mind. If we bounced off here and we spend more time holding that level at 37.5, there's no reason why this can't break to the upside and just take out, this high and then straight back up to 45, 47. All right, so it's definitely one I'm just keeping an eye on. I just want it to do a bit more work. Don't mind if it blows out down low, builds another high low, and then goes again. And I think that could be quite good because what that'll do is just wash out a few of these buyers, clean them out, and turn around and just drag them back in again on the rally. And then you want to build that fear. So there's going to be potentially a lot accumulating potentially down here, some more down here, bigger players, maybe they're accumulating down through here as well, and then it'll start to lift if that's the case, if that's what's going to play out. But I don't mind that it sits around here for a while, chops around a bit more time would be fantastic. What was the other one? CVN, AEDT. I'm not. That's your short side. I'm not bullish on that at all. Um, Off that daily, I'm not. Overtly negative on it either. And that you got to remember, it's actually come off the highs around 33 bucks down to 21. So it's had a big sell off. So any further selling that wants to come in and chop it down, it's going to be fresh selling. I think anyone that's been holding this longer term, I think that move down has squeezed out quite a few people. This move down here. The thing is, it has. I don't really take that as a key level. I'm more inclined to think that that 20 mark is more of a key level, but it could easily just pick up a bit more around 24, 25. If I was looking to go short there, I don't like the way it's oversold down here either. And you got that divergence towards the end of the year. That divergence, that initial sell-off through here, we've got a bounce, and then it really picked up steam on the way down, coming into Chrissy. This could just be, Christmas bounce on thin volume, bit of a bounce here, and then it could easily sell off. But you'd be looking to your daily. I'm not saying anything just yet to sell on the daily. Potentially, at the moment, it'd have to break through 22.50, say, down to 22.50. Then I'll be looking for my lower high. All right. So that's the way I'd attack that one, because at the moment, you can see it's been down, pop, down, pop, down. This is all part of one leg. It's just taken out that. Sorry, let me just get rid of that. Sorry, guys. You can see it's just taken out that, say, 23 at 23 lower high with this move up here. So this could be corrective price action, but if it is corrective, it really hasn't. It hasn't had a good pullback for your secondary leg high. This is all part of one leg. So if it is, we could easily pull back. You get short, and it turns around and squeeze you back out on the secondary leg higher, on a deeper pullback of that overall trend down. I hope that's making sense here, Lauren. But yeah, I'm not seeing on the daily chart to go short there. If it does, it'd have to, for me, break first 27, say 27.50, then build your lower higher, then you can go short. It is stretched up here, but the price action at the moment, like I said, anything could stay stretched for ages. It's your anchors that are your key things. If you break your anchor, whether it's on the downside or the upside, that's what is going to drag in more buyers or more sellers. Where people may be looking at that, okay, it's breaking out, let's get out, let's book the profits and call it a day. BKL, SGP, I haven't looked at that one. On the short side, yeah, look, this could easily drift over. And it is, what's that? That's a monthly chart, isn't it? So, look, it could easily drift over, but again, it's one of those things. I think there's better shorts in play. Ideally, for a short, you want to see when it's been in a good bull run, and you don't really want to short it, potentially here when it's towards the end of this move down, because it's been quite bearish for a few years now. It could be if you're looking at a very, very short term, yeah, fine. But the way I'm assessing this, if I want to get short, I don't really want to risk too much, and I want to make it worth it, if that makes sense. So I'd rather short into a market that, say, this has been going up, and we've got our rising support, and then ideally I want to see a break there, and then I want to see my lower high give me a short entry potentially. That's what I'm always looking for, rather than looking to short it. It could be a short entry here, but that is your overall downtrend. So it's nothing new here. It's not a market where people don't know what's happening, and the bulls are a bit confused. Whereas here, there's still going to be some bulls here, and there's going to be a lot of fuel to move the market lower. So it's just a different area to short. There's nothing wrong with this setup where you can short it, as opposed to, it's the same type of setup on your daily chart. But when you look at your weekly, here, you've got to ask yourself, what's the probability of this continuing like it did here, like it did here? It's probably a lot lower than it is here. This is what we're saying is we always talk trade in the unknown, not the known. This is the known, this is the unknown on the short side. Does that make sense? So that's what I think the difference is. And this is on your short, especially if you're trading, your currencies, your futures, your indices, anything like that. Being short here, there's nothing wrong with it. I'm always more of a scalper on those intraday. But on your indices, ultimately people are buyers. You don't really get a lot of people shorting into the market. So to short into it when the stock is, they can only go to zero, when there's a lot lower probability it's going to continue down to zero. And when the weighted numbers are generally buyers into the market, everyone buys, but only a certain percentage of traders will short as well. Whereas a lot of people, if they look at this, they'll close out and just wait. They won't actually short it. They'll just wait till it rebuilds and go long again. So that's why I think these type of setups, especially into shares, when it have had a couple of, a good sessions down, or spent quite a bit of time on the way down, I think they're low probability, and they're going to be a bit more aggressive. You've got to be very aggressive on your exits and your risk. No mucking around your risk. Let's look at WOW then. Not so much on the short side just yet, but if you start to run out of steam here, yeah. See how we're starting to run out of steam? Let's just draw that up. Because what you'll find when if you get it right and you're first in, like you're selling it, you're trading in the unknown, then you're going to find out pretty quick. That's probably more inclined to be a chart that I'm talking about. So you got your high up here. That's where you got the pullback. And then you can see how it's broken through that support zone. We're getting extended here. It has still ticking higher. There's nothing to say, but that type of price action is quite a bit different to this rally. Does that make sense? So that rally there is just pure bulls. The weighted numbers, people are chasing it higher, whereas this, buyers are not really chasing it. And it's like the selling pressure. It got knocked down here, got knocked down here. Potentially it's going to get knocked down again. And it's not taking out those highs very much, really. Okay, as opposed to a good rally, a minor pullback, another good rally. We had this little rally all the way back down to trade down through to the lows of 27, and it had a bigger rally, but then it gave up quite a bit straight away. And what we've done now is bounced back up, took out those highs, but it's all below this key high at 31.50, and the market's getting extended. So for this pressure to keep going and stay in overextended territory and get up to 31.50, especially after we've got this breakdown here, that for me is a little bit less likely. That's a higher probability short setup potentially than just what we're looking at before. So it makes sense. So I'll be looking, pure and simply looking at this one to see if we can get that again lower high, and then lower high. You've got your risk. That looks like it's going to be a major lower high in conjunction to a minor lower high. Does that make sense? So if you probably flick back to a weekly, that is your weekly. Go to your daily, and if we fail this level and we pull back and go back to retest it from the bottom side, and fail and build that lower high in the daily, yeah, it could be. But again, I'll just be doing the same thing as what we just did. Put your support zone under. And on the other scale, we've got on your daily time frame, that's your rising support. If we go down through here and build a lower high, then it's all going to be working together. That's a major lower high. You're broken here. You're broken here. Everything's in play for a potential short sell. All right. Okay, that's it. I think we'll go over there. I think we'll get on the BKL for John, and then we'll probably call it a day there. Shoot, Sid. Let's just look at this. This is potentially what we're looking at. So you got your on the short side, you've got this original trend up was broken here, retested the highs, washed it out, couldn't make it back here, failed. Didn't continue on. It's come back up and retested the highs again, got another lower high, and then failed. So you've got some shorts in here that could have worked. Not so much here because it really did tick off quite low here before you got your lower high come into play. And I think it was starting to get a bit extended. But I think trades like this off a lower high here, potential lower high here, got your washout, your washouts here. It all, is good. It's more aggressive trading because you are trading shares and potentially people always buy shares. They don't really short. That it is harder to sell into shares than it is to buy, but there's always opportunities there. And who knows if this market, if you get short and the market tips over, it could really pay off for you. And then you've got you've got a bit of a natural hedge to your portfolio as well. That's SID. I don't see that as a short just at the moment anyway. Either I'd sort of steer clear of that. Let's look at BKL. I'm assuming long. Yep, I'm assuming long. And I think I'm in two minds of this. It's going to be a tough one to go long too. You can see it just picked up here. I wouldn't even bother with the daily just at the moment. I'm looking at this, but yeah, I think I need a few things to happen. Blackmore's. So you've got obviously a big run up here. This is your pullback. So this is your higher level. All right, then you've got a big rally. Problem is you've got a lower high coming into play here. If you take that across the top, yeah, you can essentially say that's another lower high. But is this going to be, and this is what we're in question at the moment, is this going to be another high low? All right, and the market start to build, and the market's really probably going to put in a fair bit of work to hold this high level at it's about 115, say, high level as opposed to this below 90, 85 to 90 zone. That's what I'm looking at on the weekly. At the moment, nothing from just purely your weekly chart, nothing's changed. You've got this lower high you've got this market, okay, it's pressed down, retested that support, reacted, but not reacted very strong. So there is potentially still some selling. And then it's pressed down again, reacted back off again. And then we've got to wait and see to whether I want to see if it can continue on, press through to 140, potentially break through that lower high. And then again, it's just really breaking through. If we can draw my line straight, that's your resistance breaking through. And then if we can get this type of thing, two moves on the way down, but it's still being contained, and then just get your high low, because this is a major high low in conjunction with an inside high low. Does that make sense? It's a major high low here and a minor inside high low. If you see that, especially when you're trying to trade off your weekly chart, then after that breakup, I think that could be a nice little long, but it's still longer, really longer term. It's squeezing off those highs, and it did really get ahead of itself when it pressed up to 220 bucks. All right. So just going down to the daily, at the moment, the daily is, I still got my key level because it's all based around that weekly chart, and we are extended up here. We're extended. Every time we get a bit extended, we're getting knocked down. If we're a bit extended up here, we might get knocked down, and this could be the time when we break straight through that, that original support zone. That's when we could easily tick down through 115 off here. It is extended up here, so just bear that in mind. I think I'd be focusing mainly on the weekly because last time we extended, we only got to 136. Before we extended on the upside, we're right up at 166. Okay, so the market was moving up then. Now it's still, by looking at the MAs, we're still in a downtrend. And that's your key level for me on the weekly. I'd rather see that broken and then flick it down to your daily for a nice little high-low entry. I know, it's really hard sometimes because if that does play out, and what gives people the irrits, it gives me the irrits too. If you can watch something for so long and you go, this is what I'm going to have to wait, and it just goes on without you. That's why people get FOMOs, because they see this, they put all their effort into it, and it goes on without them. I mean, you've got to just take that in your stride, and you've got to remember that is part of trading. You're going to miss out on a lot. But what the aim of trading is not miss out on anything, but it's to miss out on the bad ones, So to take the high probability setups and just clean out all those lower probability setups where you might be chasing the market, or where, you know, like I just said, you put in a lot of effort. You don't want to miss out because, it's starting to confirm, and you start to see it break up through here, but it doesn't pull back to give you that high low to enter from. You end up entering at 142, and then that's, ultimately that's going to be the high, and it rolls over, and then you don't know what's going to happen from there. It could really break that 115 mark. So it is hard. There's so many trades that we've had in the past that you watch it, and I'll send out alerts, and then I look at it later on and I go, I was completely right. It did go up, but I just didn't get my high low. But that is the nature of the beast. And there's going to be other times when you get it, your price action plays out and it pays you. Okay. But what you're trying to do is, by sticking to your guns, is not getting in it stupid. It's just really trying to clean up your entries, not getting any stupid entries, not taking any risky trades, sticking to high probability setups and high probability trades. And so really you may miss out on a few, but I think ultimately you're not missing on anything if you don't get in. So your wins are probably going to be the same. Your number of wins or your quality of wins and all that sort of stuff is going to be the same. But what you're doing is minimizing your losses. You're really starting to pull back on those stupid trades, because when you do lose, if you miss something, you ultimately haven't got in. So it doesn't even go into your stats. But when you lose, it's into your stats. And that's what's going to take money out of your account. And that's what's going to take money off your bottom line. So if you can minimize those, which may mean at times missing out on trades that really keep going, it's just, like I said, it's just the nature of the beast. So might have to call it a day there, guys. I just saw where we are at the moment. So might finish up there. Is there any questions on that? If there are, if you think of anything later on, feel free to send us an email, support@tradesetup.com.au, and I'll get back to you. All right, hope you enjoyed that, guys. It's probably a bit longer, knowing that we're not in on Thursday. We're back in again on Monday. So if anyone that doesn't know, it's just a weekly thing now, not on Mondays and Thursdays. We're just going to do it weekly. Yeah, so I'll see you back in on Monday. Take care of the next few days. Markets, it's hovering up. We're up 15 at the moment. Just keep an eye on what happens. If anyone that's in the forum if there's something severely happens, in the markets, I'm going to keep an eye on that on the ASX chart, and it's really up at these key levels. If we start to take it in a couple of down days here, I think we're going to react lower off here. We'll see what the US does tonight. They could easily continue on and really drag us higher. We might break through 59.50, but if they go up and we don't, I think the bear's going to be in control for a little while yet. So just keep an eye on it. Stay safe. Don't load up just yet. I don't think there's any reason to load up here. Just trust what you're seeing. Plan ahead. If it does break up through 59.50, just keep going. Yeah, look, that's just the way it is. It happens, and we'll just take it each step at a time. All right, guys, enjoy your week. We'll speak to you, and enjoy your weekend. We'll speak to you again on Monday. Cheers. Bye.